Hello everyone and welcome back to another portfolio update. In this update I'm sitting at just over $238,000 here, and that is a massive jump from the last portfolio update. So the last update that I did, I was sitting at 200 and just over 205k, so I'm up basically $33,000 from the last update, which is just massive. And then from the April 8th low, which my portfolio did get down to 194,000 on the April 8th low. I'm up 44k since then, so that's just pretty massive. We've had a really good run in the stock market, good recovery um, since the bear market started there. So this is really good. I did also contribute a lot this month, so that makes up a good amount of the gains for the month. But I was actually really fortunate to get really good timing on this. I basically invested it right around, yeah, I think May 6th here. So, or sorry, May 7th, it seems. May 6th, May 7th. $11,000 into my RRSP, and I bought VOO, which is the Vanguard S&P 500 ETF on the US side, which trades in US dollars. So I buy VOO in my RSP to avoid the withholding tax, that 15% withholding tax on US dividends for Canadian citizens. So I'm able to avoid that in the RSP by buying VOO. So, and then in every other account I buy VFV. So I did Norbert's Gambit and Quest Trade, grabbed the US dollars, put them in Wealthsimple, and bought VOO, $11,000 worth of VOO. So that was a really good contribution and very good timing because the market just started peeling after that. So for once, I got some decent timing on a lump sum. So when you have this like when your portfolio is at this amount, like adding 11k is like kind of like just a drop in the bucket. So, well, not a drop in the bucket, but it's like if you got to be able to stomach volatility, and an extra 11k isn't really going to change anything. So I'm just going to lump sum it rather than like dollar cost average it in. Much better to just get it over with, just get it all in there, and feel the effects of the market right as you put it in. So the dividends were pretty good this month. So I received just $590 worth of dividends for this month, and I received $125 from VDY, $234 from ESPX, $180 from ETSX, and $51 from SBLT. So pretty good month for dividends, just under $600 there. Pretty happy with that. And I think next month we have a couple of quarterly pairs. So we have VIU for June. We'll be paying at the end of the month on the 27th. So 27th, and then and then VFE will pay out in July. So there's a couple quarterly pairs though for June. So the portfolio update will be a little bit later next month because I have to capture all of the dividends for that month. So that will be a little bit later. But yeah, looking forward to a pretty good month for dividends next month. As far as the market goes, so like everyone knows, like everything's been just peeling, like basically all the markets you can just see from the 90-day charts here, just everything is just zooming, a good recovery. So, but one thing that isn't, that has sort of been correcting a little bit is gold. So gold did hit a all-time high, and since then it's been kind of staggering and going down just a little bit. So I did have some leftover dividends from this month, and I added just a small little bit into gold. Just might as well buy a little bit in my non-registered account. So now my registered accounts are complete. So FHA was maxed, TFSA was maxed when I got my tax refund, I think, or just before then. And then before the tax refund, that was my bonus. The TFSA was maxed with that, and then with the tax refund, I was able to max the RSP. I mean, the budget for this month is looking pretty grim so far. 11,250. So, yeah, I'm in a bit of a deficit, but I had some surpluses in the beginning of the year. So, I'm in a deficit of like $3,000, but that'll recover as I lower the contributions for the remainder of the year. So, the remainder of the year isn't as exciting. It's 1,000 here, 1,000 here, then 1,250 for the majority of the other months. 1,000 here because for June, because I need a little bit of I need to bring up my savings a bit more after doing that massive lump sum contribution. And then December, I don't really like investing a lot in December because January is right around the corner. I want to start working on those registered accounts. So that'll be for the non-registered accounts, or sorry, for the non-registered account where I'll be buying mostly ESPX and ETSX. I might be increasing my international exposure to VIU a bit as well, I think, because I think my US exposure is getting pretty high now, 47% with VFE and VOO. So it's almost 50, but a lot of that can be contributed to the massive gain on it. So like, 31.65% gain, of course it's going to be up a bit more portion of your portfolio, so that's okay. But yeah, might be diversifying a little bit more. We're buying a bit more VIU, VE, as well as the covered call funds. Probably not as much ETSX. I'm over my allocation already in Canadian equities. Um, yeah, they kind of trail U.S. equities big time. So um, I probably won't buy as much ETSX, probably more ESPX, and then these international funds bring up these closer to their allocated. Maybe a bit of VDY. We'll see. We'll see. But these ones for sure. So ESPX, VIU, and VE. Yeah, I want to get them closer to their target allocation. So 15 for ESPX. VE, I want to get that to 5, and then VIU, I want to get that up to 10%. So yeah. Also, the employer, are my pension plan and my employee savings plan, um, over $50,000 now. So the combined total plus my Wealthsimple portfolio is now 290K, which is getting close to 300, which is pretty awesome. So in the registered pension plan, it's just S&P. It's an S&P 500 fund, and then I have in the employee savings program is BCE, and they just announced a massive dividend cut over 50%. So the yield was above 12%. I think it had even gotten above 13% at one point. The price has declined significantly since 2022. Like I think it's down well over 50%. Like it's getting close to down 60%. So they cut the dividend by more than half. So it was almost a dollar a quarter. Now it's down to 44 cents. So yeah, quite a big decline there in dividend yield. I mean, I don't really see the dividends from that anyways. It just sits in that account, gets automatically reinvested. So um, yeah, pretty steep, down pretty steeply on this position. So I'm debating, because I can do this. I can do a transfer from my ESP to my Wealthsimple portfolio, just like bring out a bunch of those BCE shares. I wouldn't sell them because they're down so much, and I think that I really do think that BCE should be recovering after they did the dividend cut. I think it could. I think the low is probably in, but I mean we'll see. But I honestly I don't really want to be reinvesting the dividend like inside BC because it's just performed so poorly. So what I would want to do is probably transfer these shares into my Wealthsimple portfolio, just leave them there, like just until they're like recovered a bit. But in the meantime, take that. It won't be a $237 dividend because I won't be able to transfer all the shares, but it might be something like above 100, and I can take that dividend and reinvest it in something like a ESPX or an ETSX or any of these other funds, which probably would grow faster than BCE, anyways. So that might be a good plan to just take that dividend and diversify it somewhere else because I don't like 26,000 in principal, that's like down to almost $10,000. That's hard to say. It's pretty brutal, but that's what it is. So, but yeah, that's what's going on in the employer pension plan and ESP, employee savings plan. So, but yeah, pretty good. So good month for dividends. We'll have some quarterly ones coming in soon, and yeah, you can see here ESPX about to take over ETSX. I think I have more. ESPX is yielding more now. So I expect ESPX will take over this in the chart very soon. So yeah, that's about it for this update, and we'll catch you in the next one.